Well, every trader probably knows this situation. You look at the chart, the market is trending, indicators are giving signals, and everything seems clear. You just open the trade, and a minute later the price reverses sharply, and it's the end. The money evaporates. But today, I'll try to do things differently. This time, I'll show you a strategy that saved my deposit many times in such situations. It's simple. Just two indicators, the Keltner channel and Stochastic. The advantage is that it helps identify truly effective entry points. Overall, it's a time-tested strategy. While I'm not setting up the indicators here, let me remind you that the link to this platform with a 50% bonus to your deposit will be in the video description. So, on the Keltner channel, all values are default. I only change its design because the default one is hard to read due to its colors. In the Stochastic, I only changed the first value to 5. Take note of this, indicators are set up. Let's move on. Okay, how to make trades using this strategy. To open a trade for an increase, you need a pullback green candle on the chart. In other words, a candle bouncing off the lower channel boundary. At the same time, the linear stochastic indicators should cross and change direction from the 20 zone. Similarly, for a decrease, a red candle should appear bouncing off the upper channel boundary. And along with it, the stochastic lines should cross and head down toward the 80 zone, so always focus on the two channel lines for pullback candles. And the stochastic, which should confirm the signal from the chart. I should note that a strategy, you don't need to wait for a lot of signals. There aren't many, but potential entry point is very high. I'll stop at this asset with this particular candle. Stochastic change in direction and there was active price growth, so I'm opening a trade. Let's analyze our trade. We see the stochastic lines crossing at this point. The reversal candle is this one, and the next candle confirmed it. And obvious signal for opening a trade for an increase. I will look for a new entry point right now. Here we go, let's analyze the second trade. It also closed with a profit. This candle was the reversal one, but we opened the trade too early. We should have waited for more confirmations. The stochastic crosses line at this point. All this together gave us a signal to open a trade for a decrease. As confidentially as in the first trade, but the profit is there. And I will look for a new entry point now. Here, as we can see, there is already a signal and the green candle across from the 20 zone. The stochastic lines cross it. Let's see how the trade going here. Not bad. Once again, the trade closed in profit. The reversal candle was this one. This was our indicator, and from it we entering the trade. The entry point was not ideal. I rushed too much to open it. Ideally we should have waited for the price to go lower, closer to this zone. The stochastic lines crossed at this point, which is a confirming signal for us. This is the strategy. This is the statistics. And with its help, the trading session went without a signal loss. Unfortunately, not every time we get ideal situation that I would like to show as an example. But in theory, you will try to find them other yourself. Ideally, when trading with this strategy, you should find horizontal price movements, so then there is a flat. In the flat, pullback candles appear much more clearly, and the stochastic shows signals much more accurately. The success rate of trades increases significantly due to this, and both indicators should show the signal as identically as possible. For example, a pullback candle appears, but the stochastic is between two zones. Yet it also shows a signal. This indicates that a trend is starting, meaning the next candle might once again go in the opposite direction. In general, there are many conditions, but all these conditions must be clear, and you need to think for yourself, and then the profit will come.